Great, thanks very much, David, and appreciate the opportunity to present. So let's start with the very simple question: who are we? What do we do? So Prime is a professional services firm, and our focus is around delivering advice, services, and capital, and that's predominantly to business owners and family groups. Really, that first note there about one connected is where we differentiate. So what we focus on doing is delivering multiple services to our clients to make sure that they get the maximum amount of value and we're able to generate the best possible outcome for our shareholders. Moving through to the next slide. In terms of our service, our purpose and our operations, the four key services that Prime focuses on is accounting and business advisory, wealth management, SMSF and capital services. We currently also service around about $1 billion of clients' funds under management, which we obviously help them to manage from a wealth management perspective. Our purpose at the end of the day is all about empowering our clients to achieve their aspirations, but equally our team as well. Our team is made up of 80 team members that are primarily based in Melbourne, Sydney and Brisbane. And we have a centralised services team that looks after our IT, finance, marketing and HR. 70% of our national team is based in Melbourne, but we're equally focused on building out our Melbourne, Sydney and Brisbane operations for all four services. Moving on to the next slide. In terms of our segment services and revenue, so how we actually generate revenue, we really break our business up. We've got the four service lines, but they're broken into two separate segments. 60% of the revenue that we generate comes from accounting and business advisory, including corporate advisory. Our corporate advisory division was set up around about 3 years ago. And 40% is generated from wealth management protection and also includes SMSF, admin and advice. We also have a distribution model where we work with other professional services firms that provide us with leads and opportunities to deliver services to their clients. Again, this is all focused around this mentality of a client is best served by getting multiple services through one professional services organisation. On the next slide, I'll talk to you about how we plan to grow, how we have been growing importantly, and how we plan to grow. So it is all about additional services to our 2,000 plus clients. It's also about having specialist skills in those four key areas of capability that we have. Growing out the locations. At the moment, we currently only don't deliver one service of our four in one of our core locations, which is Sydney. I'll talk through a little bit later how we might build that out in the future. But the other key thing is about having alignment with our strategic partners. So we're helping to grow our client base, but also their client base as well. On the next slide, I'll talk to you a little bit about our half year that has just completed. And I'm going to say it's been a really encouraging half. And obviously it's been a challenging period for a lot of businesses in the community at large. But we've been able to achieve growth in earnings in the first half of the year, margins, cash flow and dividends, and that's been very impressive. And to have that growth in this first half of the year, when you combine that with the previous 2 financial years of growth, is impressive and showing that we're on the right trajectory. Let's just show you a little bit of detail in terms of the revenue of the business. Onto the next slide. So talking about some of the specifics here, our earnings growth for members and shareholders has been up in this first half, up 18%. Importantly, we've been also able to improve our operating margin. So that's determined off the back of our Ebitda as a percentage of turnover. So that margin versus the previous corresponding period is up 5%. We've also been working to reduce our debt, and that's come down by $1.3 million to $8.5 million. And that's around 1.4 times our underlying Ebitda. Underlying Ebitda is the main metric that we look at from our business point of view. But obviously, we also focus on generating positive operating cash flow, and that was up 93% versus the previous corresponding period. We've also been good at controlling our costs within our business, and we saw our operating expenses down 10%. We are obviously a professional services firm, so one of our biggest assets is our team, and also one of our biggest expenses is labour. One strategic decision that we made going into COVID was to make sure that we maintained 100% of our team on 100% of pay, because we knew that our clients would need further advice from us, and it was important for us to have that continuity. In terms of our dividends, we've also just increased our interim dividend, and that's been an increase of 50% versus the previous corresponding period. Obviously, with improved earnings and also improving operating cash flow, it puts us in a privileged position to be able to deliver more value to our shareholders. Our focus will obviously continue to be on all stakeholders, but we have a very distinct focus on keeping our team safe and also making sure that our clients are getting the maximum amount of value from us as possible. I'll just show you a bit more shape of the revenue on the next slide. So Prime as a business, to give you a bit of an idea, has around about $22 million turnover. And when you look from the top of those financial highlights through to the bottom, you'll see that all but really one line item is positive and in the green. That one red item is the revenue. Contracts with customers was down slightly versus the previous corresponding period. That's been impacted just in this first half by asset markets. How we charge our wealth management clients is through an asset-based management fee. So when the markets were down versus the previous corresponding period, that slightly impacted on our revenue. We also exited an arrangement we have with an old service provider that impacted on revenue, but it wasn't profitable revenue, so we were not upset about that change. And also we exited a small part of our accounting services revenue. I expect to see our revenue will at least be in line with last year for the full year, and also expect to see future growth. And I'll run you through how that has been taking place over the last few periods. So importantly, not much of a shift or a difference between underlying Ebitda and also the reported Ebitda at $2.8 million and $2.5 million respectively. NPAT at $1 million. Our final dividend for last financial year was 0.25 cents. Now our interim dividend for this year is 0.3 cents per share. On the next slide, I'll quickly cover off a bit more detail. So really just looking at that segment revenue, the accounting, business advisory and capital division has been, or segment I should say, has grown by 3%. As I mentioned, the wealth management sector or segment was slightly impacted by the impacts I previously talked about. But over the last few halves, you can see +2, +9, +6, +2% revenue growth, which is impressive. So really what we're seeing here in terms of our margin growth is also has been a positive. It's gone from 19% to 22% to 27%. So we really think that we've got a lot of opportunity to continue to grow our business by delivering more services to our existing client base, but also having a very strong focus on cost control. Over the page, if we can, please. In terms of our balance sheet, I've covered off what our net debt is, but we have net assets of about $41 million. And we've obviously got the operating cash flow, which I've previously talked about. That's $2.7 million for the half. And the balance sheet is pretty strong. Moving on to the next slide. Dividends. So we have a target dividend payout ratio of 40 to 60% of reported and maintainable earnings. For the first half of this year, we paid out 52% of NPAT. We do have a dividend reinvestment plan. And as you can see at the bottom there, we have a trajectory of increasing our dividends over the last 2 periods. Our dividend payment date is 3rd of May for this year. Okay, and on to the next slide. I'll give you a bit of an update as to what the outlook is for our members and shareholders into FY21. So we're going to continue to grow the business organically. There are, however, acquisition opportunities, but our focus has been to deliver on the organic growth story. We are considering an acquisition prospectively in Sydney for that one service line we don't currently deliver. We will continue to reduce our debt. That's come down from over 2 times around about 12 months ago to 1.4 times. We see that coming down closer to 1 time or thereabouts by the end of this financial year. We'll continue to focus on our clients, our community, and our values, which are proactive, professional, accountable, and relationship focused. We see continued improvement in operating cash flow, and that will allow us to continue to improve our dividends for our shareholders. Our strategy is all around acceleration into the integration of the 4 key services that we've got for our clients and delivering them the value that they deserve. On the next slide, I think we've reached probably the final piece of the presentation where we can compare where Prime is at versus our peers. So on the left-hand side at the bottom there, you'll see that our share price is around 9.3 to 10 cents at the moment. We have reported EPS of about 1.43 cents per share. So that's taking second half FY20 and first half FY21. We're trading at around about 7 times. And we have got obviously that interim dividend at a dividend yield of about 5.9%. Interestingly, our closest comparable companies are Kelly Partners, Count Plus, and Eastern Investments. And we currently trade at approximately half what they trade at from a multiple point of view. The business is well held by key management and staff with its 41% ownership. Really, that brings my presentation to a conclusion here. So I'd like to take the opportunity to open up to questions if that's appropriate, David.
Simon, a great presentation. And as I said in the beginning, the purpose of this webinar series is to find true hidden gems. And I think we've really found one with Prime. A company that's paying dividends, profitable, growing, is a company that a lot of self-managed super funds in particular probably should be keeping an eye on. And given your discount to peers, makes it an interesting one to keep an eye on. A couple of questions from me. COVID, we know during COVID, the rise of investors and the rise of those looking to invest in stocks grew rapidly. And I know you touched on it, but what did it mean to your business? I know from a people perspective, keeping people together and making sure you were there to ride out the storm was important. But what did you see from a client perspective in terms of how your clients interacted with your business, and did you see growth, and why and where did that growth come from?
Yeah, it was interesting. And obviously when you sort of entered COVID, there was a lot of nervousness from a lot of people, including management in businesses and various other things. So, if our clients are typically business owners and family groups and people with SMSFs, really the response to that question is varied. So if a client is just a client of our wealth management division, they have become reasonably adept at seeing market movements, having gone through GFCs and things like that. So I think our clients are, because we communicate regularly, we're well placed to understand to stay the course, and that's obviously proved to be a resilient strategy there. Our business owner clients were obviously very concerned about what that might mean for their business. So we focused on making sure that their strategy was correct, make sure that they were remediating, they were looking at their cash flows, they were doing budgets on a regular basis, engaging with their landlords, engaging with their banks. So we were very much on the front foot about being in a position to make sure that we had all the information to make the best decisions. So different sort of situations for different people, but I'm pleased to say, given our typical client is a business owner with an established business, or a wealth management client with $1 to $3 million of assets under management, our client base has been pretty well protected through this period. And just to kind of touch on that final point there, David, if I can, in terms of fees and the way that that's positioned for us, our typical clients are paying us between, say, $10,000 and $30,000 a year for ongoing services. And 80% of our revenue is recurring in nature from those existing customers that come back regularly.
Did you see client growth? People who historically may have thought, what, I can do this myself, or, my business isn't that complex. Did they come out of the woodwork, even in a post-COVID environment, come out of the woodwork and go, what, I actually do need some help when it comes to this, and having a strong partner and someone who understands the business and can help me with strategy is important for my business going forward? Yeah,
so 3 out of our 4 divisions grew during that period of time, and our accounting division has been very strong, and our SMSF division actually grew. That only was established 2 years ago, and that's actually now got 1.4 million of turnover. And our corporate advisory, or our capital division, was started 3 years ago, now has $3 million of revenue. So we've now got probably triple the amount of work within the capital division than what we had 12 months ago. And the SMSF division is probably growing at 20 to 25%. So look, I think that it's safe to say that there's demand for the services that we offer. And we're very encouraged that we're getting plenty of new clients, essentially through all divisions, which is a nice story to have.
You touched on towards the end of your presentation that you're trading at a discount to peers. Why do you think that is the case?
It's always a hard one to answer, and I wish I knew a little bit more about that. But around about 3 years ago, we restructured the business and put it in a position of being one total consolidated firm. And it does take a bit of time to execute on that. So now that we're at the end of that period and we're getting some great results, I think it's probably time for investors to revisit that and see what the future might hold for us. So we're definitely on the right trajectory now.